Hello. Thanks for attending our Navigating an Unclaimed Property Audit webinar. This webinar was put together by the National Association of Unclaimed Property Administrators for the benefit of holders. The webinar will cover the following topics from the state's perspective. 1. Multi-state and single-state examinations. 2. Contractor-assisted self-audit. 3. Non-disclosure agreements and statutory confidentiality provisions. 4. Audit scoping. 5. Abandoned and unclaimed property evaluation, identification and quantification. 6. Due diligence. 7. Audit finalization. 8. Penalties and interest. And conclude with 9. Holder best practices. Let's start with the state's authority to evaluate and enforce compliance with its respective Abandoned and Unclaimed Property Statute, which we will reference as AUP for short. State AUP statutes include the following provision or relatively similar to the following in its enforcement and/or examination of records section. For purposes of the application and enforcement of this statute, the state may at any reasonable time and place examine the books and records to determine if the entity or person has complied with this statute. Additionally, any books, records, papers, information, or other objects determined by the state to be necessary to conduct a complete examination must be provided. Audit types. Examinations vary in type. The record types and audit methodology of the multi-state and single-state examinations should not differ. However, holders are required to provide full and complete records in order for the auditor to identify that portion of dormant property, which may be reportable to the audit, state or states if it is a multi-state examination. The multi-state examination is a compliance examination of which multiple states have elected to participate. Holders respond to auditor record requests for various property types. The convenience of this type of examination is that the holder need only to provide a singular, complete response to the records requested. These records are subject to evaluation of compliance with all the participating state statutes. A single state examination is a compliance examination of which a single state has elected to evaluate holder compliance. Exploring examinations at a more granular level, an examination's focus may generally be either a full general ledger or a limited scope examination. General ledger examinations. The most common examination type is a full general ledger exam. This examination type is quite comprehensive and generally includes an evaluation of liability for outstanding and voided checks, accounts receivables, credits and overpayments, payroll and employee benefits, and unidentified remittances. Depending on the industry in which the holder conducts its business, property types of exposure may expand to include, however may not be limited to, gift cards, stored value cards, and e-gifts royalties, customer and wallet accounts, and potentially any other intangible or tangible property unique to the holder's industry. Securities type examinations. Examinations of holder compliance are sometimes limited in scope regarding securities. Holders with exposure to dividends, shares, interest, and other investment properties may be subject to securities examinations. Most holders use transfer agents or other third parties to manage their securities. However, it is imperative that the holder is cognizant of whether the transfer agent or third party is contractually responsible for compliance. Holders must work with their transfer agent or other responsible third party to respond to record requests. Examinations of holders with exposure to life or endowment insurance policies and annuity contracts are another type of limited scope examination. This examination would include a review of policyholder terms, current status, and other useful information. Holders should familiarize themselves with internal policies applicable to notification of death and the death master file, as well as statutes of relevance such as the Uniform Life Insurance Benefits Act. Contractor-assisted self-audits, CASA. These examinations are authorized by some states to allow holders to conduct an internal assessment of compliance with the assistance of either a state auditor or third-party auditor. Holders should expect the auditor to request books and records, similar to that of a normal audit, be gathered and evaluated for exposure. The auditor assists with testing methodologies and may request copies of the records reviewed to confirm reliability of results. Holders should comply with requests and timelines of the CASA examinations. Failure to comply may result in escalation to normal audit. Non-disclosure and confidentiality agreements. Non-disclosure agreements, often abbreviated NDA, are completed at the beginning of many AUP examinations following the initial meeting or entrance conference. It is a legal document executed between the holder and auditor, which detail terms and information of which both the auditor and holder wish to protect from dissemination or disclosure. Additionally, the agreement is binding between the parties and addresses matters such as, however not limited to, the obligations of both parties to protect data transmitted between one another and provide remedy for breach of the agreement. It is important to understand that most states do not recognize non-disclosure agreements as a required document or precondition for examination progress, nor does it provide justification for delaying the examination. State unclaimed property laws provide statutory confidentiality protections that extend to the party authorized to conduct the examination. Holders should reference the confidentiality provisions of the respective state's unclaimed property statutes. Obstructing or delaying an examination due to non-existence or execution of an NDA is strongly discouraged by the states and may be viewed as non-cooperation. Phases of abandoned and unclaimed property examinations. Generally, there are 5 phases of an AUP examination. 1. Scoping. 2. Record request and evaluation of exposure. 3. Unclaimed property liability identification and quantification. 4. Due diligence. And 5. Examination finalization and closure. We will now briefly expand on each phase of the AUP examination. The scoping phase. The scoping phase of the examination initiates shortly after the entrance conference. This phase is critical as the auditor and holder work together to identify the entities, bank accounts, and certain general ledger accounts that will be included in the audit. The holder should work to provide a full list of entities and related entities, both regarded and disregarded, to the auditor for consideration. Bank accounts and general ledger accounts are also requested for all entities, again both regarded and disregarded, for evaluation and scoping consideration. The auditor may present inquiries to understand the holder's accounting and transaction methodologies. It is best that the holder fully cooperates and provide accurate and detailed feedback, as all of the information provided is utilized to narrow the examination scope down to the entities, accounts and ledgers with unclaimed property exposure. Limitation or suppression of data may result in a more lengthy and burdensome scoping process and may be viewed as non-cooperation. The record request and evaluation of exposure phase. Documents requested by the auditor include both internal summary and detail-level data sets. Additionally, for completeness and reliability testing purposes, the auditor may request third-party documentation such as bank statements or qualified accounting records. The profile of records requested may vary by property type. However, it is common for the record requests to include check registers, aging reports, and ledger detail for certain accounts of interest. For efficiency purposes, the holder and auditor may agree to providing certain internal reports unique to the business or industry that may be readily available. The information may be subjected to reliability testing by the auditor. The report years and look-back periods vary by state. Most states are statutorily allowed to review 10 report years of information, while a select few may have shorter reviewable period. The look-back period takes into consideration the dormancy period for property types. which is the reason it may appear that the auditor is requesting records beyond examination report years. This is standard and authorized practice. The auditor should be made aware of any record retention constraints. The evaluation of exposure by the auditor can be a lengthy process, as several years of differing transactions and activities are interpreted. Holders may receive questions regarding transactional practices throughout the review. Holders should be honest, clear, and forthcoming with information to prevent any delays in the evaluation process. Once the evaluation is complete, the auditor will either present additional inquiries or a schedule of presumptive AUP liability, the liability identification and quantification phase. The schedule of presumptive AUP liability does not often reflect the holder's true and final liability. This is due to auditor reliance on records generated as of a certain date without background disposition information of which the holder is privy to. Upon receipt of the presumptive AUP liability schedule, the holder and auditor should confer on what the standard of sufficient documentation is in hopes of avoiding ineffective and burdensome data gathering. Documents such as endorsed, cleared check copies, bank statements proving encashment, and other reliable proof of resolution documents should be provided in a timely manner to the auditor. The auditor should then provide timely and efficient updates to the AUP liability schedule. Once internal documentation submission efforts or the timeline for submission has been exhausted, the remaining properties should be included in the external outreach initiative, referred to as due diligence. The due diligence phase. State statutes require holders to exert reasonable effort to re-establish contact or reunite AUP with its rightful owner. The timing of when the notice must be provided to the owner varies by state. Generally, the auditor will request that due diligence responses are returned by the recipient in 30 to 60 days. Some states, such as California, provide additional guidance for due diligence and reporting, which must be adhered to. The auditor will provide the holder with this guidance. As responses to due diligence mailings are received by the holder, they should be issued to the auditor for review. The auditor will review the document and update the AUP liability schedule accordingly, as this evidence substantiates contact with the apparent owner. Once the due diligence period expires, the final AUP liability schedule will be provided to the holder. The finalization and closure phase. The auditor provides a closing package to the holder, which will include the final AUP liability schedule and guidance for the reporting and remitting of the property to the applicable state. Once again, as you can guess, reporting and remittance procedures vary by state. The auditor provides guidance to the holder on a state-by-state basis and may assist the holder to conclude the examination closure steps in an efficient and effective manner. Penalties and interest. State unclaimed property statutes authorize the AUP administration to assess interest and penalty, commonly referred to in the industry as P&I, for non-compliance. Assessment of P&I is heavily dependent on holder cooperation and other factors, such as egregious and unjust enrichments or private escheat. Penalty and interest rates vary by state and often compound annually. Holders may submit a request for the waiver of P&I to the auditor and the state. While submission of a waiver may not guarantee full or partial abatement, it is still in the holder's best interest to submit with notation of the cause of historic non-compliance and intention to adjust controls to ensure future compliance. The auditor will provide guidance on how P&I should be handled for the states. Let's wrap up with some best practices. Here are some best practices to consider. 1. Create and maintain detailed controls, policies, and procedures that are specific to your organization's unclaimed property compliance. 2. Identify and assign responsibility for unclaimed property compliance to a company officer or senior individual of authority. 3. Know the property types for which your company is susceptible to generate. 4. Evaluate the organization's record retention policies and ensure that it allows for the maintaining and retention of accurate and reliable records. 5. Introduce unclaimed property compliance as part of your company's employee development and training program. 6. Develop a collaborative tone with the team conducting the audit. All parties are working toward a goal of reuniting funds to the rightful owner. In conclusion, the NAUPA Education Committee sincerely thank you for attending the Navigating an Unclaimed Property Audit webinar. We hope that you have found the content useful and informative.